Let me tell you something. Right now, interest rates are at 7%. 7%. And Mr. Doug Jackson talked about paying points. Okay. So let me show you something about that right now. We're going to put that on the screen, and I'm going to duplicate this tab, and we're going to put the same loan in. Okay. Because now the loans are at 7%, folks. They're at 7. They're not at 5. Now, I'm going to do a little bit more math for you, and I'm going to tell you how ridiculous this really is based on the math. All right. So now I have a loan, all right, the same loan, $1,488,000. All right. At 7%, the bank wants $1,668,000. At 5%, the bank wants $1,122,000. Uh-oh, 122,000 versus 688,000. Folks, let me tell you what's going on here. So we're going to put $668,000. Okay, I'm just rounding it off. 668,000. All right. So we're going to subtract from that $122,000. All right. 122,000. That is a $546,000 savings. All right. So we can buy those points. Let's say we can buy those points for an extra $25,000. We put an extra $25,000 down, or we can put an extra $50,000 down, and we can get that lower interest rate from 7% to 5%. All right. So listen, I work for you in the bank. Okay. I work for you in the bank. And you know that part of banking is if you want to get a lower interest rate, you can just pay a little bit extra money, correct?
Right.
You know about that. So I work for you. And here's what I just did for you. I just got our client to give us an extra $50,000, so we could sell them a 5% interest rate instead of a 7% interest rate. Okay? So I'm happy. So you as my employer, when you start doing the numbers, so Don, what you just told me is they were willing to pay the 7%, but you sold them a 5% loan for $50,000. So that means I was going to make $1,668,000. Now I'm going to make only $1,122,000. I'm losing $546,000, and you sold that for 50 grand. What's your feeling towards me right now as me working for you?
You're not coming to dinner.
Come on. See, why is the bank doing that? Why is the bank selling lower interest rates?
They can get bigger down payment.
So they can get a bigger down payment. But I feel as a consumer, listen, I'm getting a $546,000 break, and they sold it to me for 50 grand. You better believe I'm going to give them the 50 grand as a consumer. But again, I have to ask the question, if I'm saving money, who's losing it? Can I show you why the bank does this?
Please.
She said, please. All right. All right. She said, come on, show me why. Remember, and I need you to write this down. Everybody that's listening to me or watching this, 2 things: control the principal payment and you control the loan. Write it down. Control the principal payment and you control the loan. Second thing, this is what interest cancellation does, folks. Interest cancellation pays off loans, not anything else. And number 2, interest payments I skip don't matter. Interest payments I skip don't matter. Are you ready? I'm going to show you what no one on the planet, your real estate agent won't show you this, your accountant won't show you this, your loan officer won't show you this, anybody that works in finance won't show you what I'm getting ready to show you right now. When I have a 7% interest rate, my principal payments, because remember, control the principal payment, you control the loan. At 7%, my payments are $1,800 a month. $1,800 a month. And my interest payments are $8,600 a month. Wow, $8,600 a month. So if I want to get rid of one line on my schedule, I just have to come up with an extra $1,800 at 7%. Does this make sense to you? Are you hearing me? Now, because I'm telling you better, at the higher interest rate, my principal payment is smaller at the higher interest rate. So all I have to do is come up with $1,800 to get rid of one line. But Don, look at those interest payments. They're $8,000. But remember, interest payments I skip don't matter. Let's go back to the other line. So if I'm at 5%, okay, my principal payments are $2,500. So if I prepay $30,699 at 5%, I get rid of 12 payments I never have to make, and it saves me $73,000. But at 7%, if I have an extra 30,000, because see, at 7%, I still have that money in the bank that I'm putting away, right? For my repairs and maintenance. So let me take a look at what $30,000 prepaid to the 7% loan would do. Knocks off 16 months. 30 grand on the 5% only knocks off 12 payments. $30,000 on the 7% loan knocks off 16 payments. So folks, tell me, if you had $30,000 to apply to the loan, would you want to eliminate just 12 of your payments, or would you want to eliminate 16 of your payments? So the higher interest rate allows you to do that. So if you come into a bank and you start talking about, what do I need to do? Okay, what do I need to do to pay this loan off faster? Because that's what I'm thinking. I need to get out of this fast. No one is talking about how to get out of it cheap. What do I need to do to get out of it fast? Then they're going to say, oh, listen, how can I get out of it fast and I can save a little bit more money? They say, get the lower interest rate. Get the lower interest rate. We're only going to charge you about 25 to 50 grand to get it. And now you have the ability to save money on the overall cost of the loan. So all on the front end, nothing on the back end. How does this benefit me on the back end? So when you're trying to get out of this loan faster, you've got to come up with more money to apply to principal to do the same amount of work at the lower interest rate. And guess who understands this so very well? The people that own the bank, not the people that work for the bank, because they don't even teach this to their people. Are you hearing me today?
I don't mean to interrupt, but so you're saying the higher the interest rate, the lower the principal.
The higher the interest rate, the lower the principal payment. And when you control the principal payment, you control the loan.
Okay.
It's just freaking you out, isn't it? Everything that you've ever been taught, think how you can do the opposite. Call us at the P.I.L.L method, and we're going to show you what's really going on behind the scenes.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.